A 17-year-old on their own car insurance policy in Minnesota will pay between $4,500 and $6,500 a year. The same kid on the parents' policy, $1,400 to $2,000. That's a $3,000 to $4,000 difference every single year. And most families have no idea this gap exists. By the end of this video, you'll understand exactly why young drivers cost so much, and you'll know the 3 decisions that actually control how much you pay. Here's the truth. Young drivers crash more often and more severely than any other age group. That's not judgment. That's actuarial data from the Highway Safety Institute. 16 to 24-year-olds generate significantly more insurance claims per vehicle than 30-year-olds. In Minnesota, specifically, you've got long, harsh winters where ice and snow driving is especially dangerous for inexperienced drivers. Add in higher traffic in the Twin Cities metro area, and your exposure goes up. Insurance companies price based on actual claims data from millions of policies. The math doesn't care how good a driver your kid is. The rates reflect what the data shows. Here's the single most important decision. Keep your young driver on the household policy as long as you can. When you add a teenager to an existing family policy, the rate increase is calculated as an increment to what you're already paying. Your household already has loyalty discounts, multi-vehicle discounts, and bundle savings. The cost of adding one more driver is way lower than writing a brand new policy from scratch. I see this all the time in my agency. A parent's policy that costs $2,200 a year jumps to $3,600 to $4,200 when the teenager is added. That's $1,400 to $2,000 more per year. On a standalone policy, that same 17-year-old costs $4,500 to $6,500. You're saving $2,500 to $4,500 every year by staying on the parent's policy. If your young driver goes to college and doesn't have regular access to a car, ask your agent about the student away from home discount. Most carriers will give you 30 to 40% off the young driver surcharge. Why? Because if your kid is at school in Iowa and only drives during breaks, they're not getting a full year of exposure. They're getting a fraction of that. Clients ask me about this every week, and most of them had no idea it existed. It's one of the easiest discounts to miss. The number one thing families get wrong is moving a 21-year-old to their own policy to save the parents money. You think you're being helpful. You're actually costing yourself more. That young drivers' rates don't drop significantly until they're in their mid-20s or until they buy a house and move out. Trying to split off at 21 usually ends up costing more than it saves. Stay on the household policy until it actually makes sense to leave. If you've got a young driver at home or heading off to school, call us right now at 763-733-7475. We're licensed in Minnesota, Wisconsin.